York, the financial capital of the world. And for some of you know that I know one of my good friend Andrew Keene that's coming on loves coming to New York. It's like his second home to him. And one of the great places over here is the Hamptons. And, you know, literally, it's the only place you could rent a summer home for 3 months. At the average is like between $100,000 to $250,000 for 3 months to rent a summer home. Yep. And then I heard the most expensive one went for about like $30 million just for 3 months. You know, well, you're talking $200, $300 million homes. You know, this is what people do here in New York. And you know what? You know who's renting them? The people in the finance people that are doing exactly what you're trying to accomplish. And like anything else, I want you guys to understand there is no business in the world that will pay you the salary that you could make in the market with the least amount of education and with the least amount of money to invest. You just need to have the right mentor. And that's what we accomplish here at Cybertrade University. At Cybertrade University, you know, this is closing bell, and what we like to do is we surround ourselves with great traders, okay? And obviously, being in business for 20 years, we love what we do. And our channel partners, guys like Andrew Keene, you know, coming here and doing the same thing. You know, Andrew, I don't know if some of you have ever seen him or listened to him before, but he's a very close, very good friend of mine. Whenever he comes into New York City, we always go out, me and John and Andrew all the time, and we always like to just have fun going out in a town, talking about trading, opportunities, stocks and options that are going on, you know, because great traders, I want you to understand, great traders never stop learning, and great traders will always surround themselves with great traders, okay? You know, and that's the way you have to look at it. It's the ones that don't surround them around great traders, the people you don't want to learn from. And because we're always learning, and that's something that you have to look at. So that's why we have Andrew. Now, Andrew, for some of you who don't know, I don't know if you ever seen him do speaking before, he's got to be one of the best dressed guys that I know in the trading business. If you ever get the opportunity to see him in person, his hair is perfect. He's got it always tells you the personality. If a guy knows how, a man knows how to, cares about the way he dresses, is the way he teaches and presents himself, and that's the way he teaches. He teaches a way, and he presents because he loves what he does. And that's why I love to have Andrew coming on all the time. You know, and we have Andrew on Cybertrade University probably more than any other educator in the industry. So, I hope I didn't blow Andrew's head up too much, but you know what? I want you guys to really listen very closely because I am also, because I'm willing to learn something from him because I know he's got some new stuff to cover. So with that said, ladies and gentlemen, Andrew, stage is all yours, buddy.
Test. Thank you, Fausto, for that introduction. Yeah, you probably did blow my head up. I will say one thing, I try to dress pretty nicely. But I'll tell you what, I've never seen anybody, a trader that I know that has a nicer watch than Fausto. He has a very expensive, nice watch that he bought. How? By making money trading. So we have a new topic today. We've actually never done this topic to you guys before, so I'm really excited to present it. Anytime throughout the presentation, you guys have any questions, I multitask while I multitask. Feel free to ask any questions you guys want. I'll probably go for about 45 minutes, and then we're going to give away a couple free workshops at the end. We'll give like $1,000 worth of workshops away. So let me start the recording here. I am not shy. Today's topic, which is a new topic that we've never presented before, is how to beat hedge funds in the longer term. I'll be your presenter today. My name is Andrew Keene. Past performance is not indicative of future results. You know, I do so many different topics. We try to do a new topic like every other month. So every other month we try to do a new topic, and we teach you guys many different things. And a lot of people have said to me, hey, Andrew, I love trading. I love the stock market. I like to be in it. But I can't be sitting at my computer every single day. I'm not like you. I don't watch the S&P 500 futures trade. I have a family. I want to spend time with them. I have another job. How can I be in this market in the longer term? So today we're going to teach you, you know, what unusual option activity, which is my bread and butter. If you guys watch CNBC, the Nigerians, Pete and John Nigerian, always talk about unusual option activity. I know Fausto's really good friends with them as well. And we're going to teach you guys how you can beat the hedge funds in the long term. And this will be recorded, of course. Yes. So let's go through here. Is that go into the next slide. Huh. There we go. Okay, little risk disclaimer in here. Unfortunately, I have to put this in every single webinar due to Dodd-Frank. I am not a registered investment advisor. I do not have any licenses. No one on my team has any licenses. We do not have a 7, a 63, or 56. So I cannot give you guys recommendations or advice. Day trading, short-term trading, option trading is very risky. They generally are not appropriate for someone with limited capital. Never execute a trade unless you're willing and are prepared to lose your entire investment. All trading operations involve serious risk, and you can lose your entire investment. No trades are recommendations or advice. As I reiterate the fact, I cannot give recommendations or advice because I'm not a registered investment advisor. So all trades are for educational purposes only. Contact your broker or registered investment advisor for execution, margin, and other capital requirements. Everybody who watches today's presentation adheres to all risk disclaimers on optionhacker.com and keenonthemarket.com. So today, thankfully, I can give you a webinar to you guys when I had a very, very good, profitable trading day. So we look at my P&L here. I have to move this real quick. So here's my P&L, and you can see here, I trade with this account's about $280,000. So a couple things that are important. I trade on about $280,000. Today was one of my best days I've had in a while. Here's my profit, $21,252. Okay, most of that money came from one stock, which is SO. I was long 1,000 puts in that, and the stock was down about 60 cents. So $14,000 of profit. You know, the only things that I really care about, and you know, I never look at what percentage of my trades that are winners. You know, people that look about what percentage of their trades are winners. You know, if you gave me $10 million and said, hey, Andrew, I want 95% of my trades to be winners. That's easy for me, okay? All I care about is my end of the day P&L. So I trade, right now I'm only trading in this account. My Interactive Brokers account, I have about $100,000. It kind of just sits there and hangs out, and if I ever need capital, I go in there. P&L in this account is $89,000. I have a Trade Monster account, which moved to Option House, and Trade Station. I made about $13,000 of that, and then up about $42,000 my Interactive Broker account. So this year I'm up about $145,000 year to date. So a pretty good year so far. We're only 5 months into the year, but I show this P&L just to everybody all the time whenever they want to see it. Like I said, today was a good day. I have bad days. Yesterday I lost about $4,000. I am off of my highs, but this is today's year to date in just one account. I'm a pretty active trader. I probably have somewhere between about 20 positions on at any given time. So there is my account. So let's go on with the presentation here. Boom. This is me. This is actually in the middle. I'm going back to Chicago this weekend to my main office is based in Chicago, and we're right across in the financial capital of the world. Actually, Chicago, not New York, was voted by Trader Magazine as the best place to trade in the world for 4 straight years. That was back when they had 3 exchanges. They had the CBOE, the Chicago Mercantile Exchange, and the Chicago Board of Trade. So my main office is right downtown, across from the Chicago Board of Options Exchange. I moved to San Diego in September. So I'm trading for San Diego. That is actually me in the middle, not the big guy on the right, even though that'd be funnier if it was me on the right. I studied at finance at the University of Illinois Champaign-Urbana, and then I became a market maker on the floor of the Chicago Board of Options Exchange. From 2006 to 2009, I was the largest independent Apple trader in the world. That was before iPhone, iPad, iTouch, iPhone 6, 5, 4, 3, 2, 1, whatever number they're on now. And I was a very active big trader. I stayed on the trading floor as long as I could. Eventually, they went insolvent, and I decided, hey, I want to start trading upstairs. So I started trading upstairs, and to be honest, I wasn't profitable. I lost some money trading S&P 500 futures, day trading, and then I was trading some equity options, and it just wasn't making sense to me. I opened a trading room where I brought a community of traders together and started trading live in front of them, and then I started trading a lot better. Okay? Every time I give a new course or workshop, it actually helps my individual trading. Okay? I'm always learning. I personally buy option books. I watch webinars. Just like you guys, I go to a lot of webinars to see if there's something new I haven't learned. There's the new good VIX ones nowadays. Most people don't understand how to trade the VIX. But, I'm not one of these guys. I went to MIT, didn't go to Harvard, didn't go to Yale. I mean, I went to Illinois. It's a good school, Big Ten school. But I started from, pretty small. I had to live at my parents' house for a year and a half while I was a clerk. And then, I started trading, and every year I made more money than the year before. I then watched my account blow out twice. And just like you guys, I've blown out trading accounts. It's not exactly a fun thing. But, I haven't lost money in a trading year since 2009. So 2009 was the last time I lost money. So this will be my 6th straight year, knock on wood, that I'll be making money. Now I trade from sunny San Diego, and I was just talking to Denise on a private message, and she said, it's rainy and cold in New York City. And I know Fausto was making comments about, houses in the Hamptons, and I think that $20 million house might have been his, so I'm really excited to be invited to that. On the bottom left here is a view from my condo, 22nd floor looking out west. I live in the highest high-rise in San Diego. I moderate a trading room. And I trade actively throughout the day. On a busy day, I can trade 3,000 options, depending on the day. Regular on CNBC. If you go to cnbc.com, I just did a video for Twitter long, so you guys can watch that video on CNBC. I'm on CNBC, including their online portions, 3 to 4 days a week. That is my car I just bought when I got here. It is now in the shop, and it's a money pit, but I love it. Put the convertible top down. I bought that with all profits from trading, and also I'm on BNN Canada, Bloomberg, and Fox Business, but mostly CNBC. CNBC likes me. So it is a fact, and then throughout this presentation, I'm going to give you guys numbers and facts, and one thing I want you to remember is 90%. Unfortunately, 90% of all traders that trade lose money. Okay? All traders that trade lose money. Why is that? Okay, the way the brain actually works and operates, and I'm actually thinking about doing a course on psychology of trading. When stocks go down, people start buying them. When they go up, they start selling them. Okay, I believe in one technical analysis method. It's called the Ichimoku Cloud, or Ichimoku Kinkin Hoi. I know my good friend Hubert Center uses it as well, and it tells you, as stocks go higher, I should be buying. As stocks go lower, I should be selling. Okay, if you think about it, when you talk about like a falling knife, a knife falls off a countertop. What is your first reaction? Your first reaction is usually literally grab the knife, but the knife is falling. You're going to get cut if you grab that knife. They had Mark Cuban when JCPenney hit $4, and he said, "I'm buying JCPenney." Okay, it's like when you're playing poker. It's great to win with pocket aces, but how do you play? And it feels better when you can call somebody out on the bluff. So, 90% of people, will lose money trading, and that's just a fact. I don't like Mercedes. I don't know. I never liked Mercedes. I have a Range Rover, too, Sport Supercharged. But I don't, when you should be trading, stocks go higher, you buy them. Stocks go lower, you sell them. And I know Fausto believes in the exact same philosophy, okay? He finds these stocks that are always on the move, and as they go up, he wants to be buying them. As they go down, you want to be selling them, okay? Too many people are in this belief that as stocks are going up, they want to short it, okay? Oh, Netflix is such a great short because their PE is too high and their growth rate's not good enough. Well, you know what? Anything in the short term is only worth what one person is willing to pay for it and one person is willing to sell it for it. Let me give you a perfect example here. If you own a house, let's say you own a house in the Hamptons, and you put it on the market for $5 million, okay? And the highest bid is $4 million. Is your house really worth $5 million? It doesn't matter what you think it's worth. It's fair market value, okay? If 5 people come in and say, hey, I'll give you $5 million, and then one second guy says, I'll give you 5.5. Next guy goes, I'll give you 6. Does that mean that house is still worth $5 million? No, it's worth more than that. So stocks in the short term is just a supply-demand curve between buyers and sellers, okay? If a stock falls one day, how do you know it will go up the next or days later? Well, I use technical analysis called the Ichimoku Cloud, but more importantly, I'll talk about it here. I trade unusual option activity. Paul Tudor Jones, which is probably on record as the best trader ever, said the key to trading is emotional discipline. And I tell all my subscribers, over the course of the last 3.5 years since I launched my company, I probably taught, 30,000, 40,000 students how to trade, and I tell them the same thing. Okay, there's a lot of things I repeat, and every time I say it, and it kind of makes sense. And if you dig it into your head, it'll make sense eventually. And one of them is to take the emotion out of trading. If you guys trade emotional, I promise you, well, I can't promise you, but I don't think you're ever going to make money. Okay, you got to be a non-emotional when you're trading. If you take $10,000 and you're trying to trade with $10,000 and you need that money for rent, you shouldn't be trading. Okay? If you have that $10,000, you say, well, I want to trade, I don't care what happens to it, you shouldn't be trading either. Okay, everything in life is a risk versus reward setups, but you shouldn't get mad or upset if a trade does not work. Okay, I have a lot of trades that don't work. I'll be completely honest. But like I said, this will be my 6th straight year where I make money. Okay, so over time, I can lose money in a day, a week. I've lost like 75 grand in the last 6 weeks. But year after year, I continue to be profitable. And why do I trade? Okay, as Fausto reiterated the fact, this is the best job in the world. I've made millions of dollars trading in my trading career. And that's not profit minus losses, that's net profits. I've made millions of dollars of trading. I have the luxury of waking up at 6 o'clock San Diego time trading. Okay? If I'm trading bad, I might go to the gym for an hour. Okay? I get done at 1 o'clock every day. Go to the beach. Okay? I have the luxury of having a nice car, nice watches, nice clothes. Why? Because I'm good at trading, and I want to teach you guys it. A lot of times through these presentations, I always say 3 things, as I go to webinars, and I used to watch, moderators and, gurus speak. There's some really, really good, teachers out there. Fausto and me are really close. Like he said, I was almost going to go to New York again, and then I didn't, so hopefully I'll be back there in a couple months. But me and Fausto are really, really close. But there are some people out there, maybe aren't so good. Okay, when I look for someone that I wanted to believe in and want to learn from, number 1, do trade real money. Can I see a profit? Can you show me in a non-Excel spreadsheet your actual trading account that says you're making money? Okay, it's like, hey, would you rather be taught how to play golf by Tiger Woods or by some guy who's read 200 books on golf? Okay, you want to be the best at your industry. You learn from the best. Okay, me and Fausto met on a panel in Vegas about 2.5 years, and we just clicked off, and that's like, Fausto, that's a really nice watch. He goes, I got this watch. I bought it trading. Okay, so trading really is the best job in the world. If I want to take 2 weeks off, I know traders that used to trade on the trading floor. They would make a couple $100,000 in a couple months. Hey, I'm just going to take a couple months off. I'll go to Costa Rica for a couple months. Come back, make more money. I'm going to go out of town again. Vacation, luxury, okay? I always say that money doesn't buy happiness. What does it do? It just makes life a lot more easier. Wrong slide, I'm trying to go forward. So, institutional edge, okay? And I talk about this a lot. There's 8,700 publicly traded companies. Out of those 8,700 publicly traded companies, there are 4,199 companies with options. Throughout the course of the day, I watch 1,200-ish trades going across the tape every single day. I allocate my personal capital on these trades. I have currently probably around $400,000 in my trading account. It got as high as $700,000. I just took out a check from Thinkorswim for $150,000, which was my profits from this year. So I'm back to where I started, but I took out profits. But institutional order flow. And what is institutional order flow? I know the next course is September. I was going to come to the last one, and I didn't make it. Boss was mad at me. What other advantages they have, okay? So throughout the course of the day, I'm watching institutional order flow, okay? I'm watching what is called unusual option activity. Every single stock trades X amount of stock it trades in a day. Say the average in Bank of America is 20 million shares. If it traded 40 million that day, that'd be 2.0 times usual volume. If it's not usual volume, it's unusual volume. The option market is the same way. Maybe Apple trades 300,000 options in a day. Okay? Maybe something like Hewlett-Packard trades 20,000 options in a day. If it trades 60,000 options a day, that would be 3.0 times usual volume, otherwise known as unusual volume. Options are traded for one of 2 reasons: speculation to the upside or downside, or a hedge against a stock position, warrant position, or bond position. Oh, look, the Nigerians are on TV right now talking about options. Options are the wave of the future, guys. If you have never ever traded an option, you're getting left behind in the dust, okay? Because your ROI is, stock moves 3%, your option can trade and move, 50%. I took a trade today in First Solar. The stock literally moved 70 cents, and I made $4,000 profit. Let me show you this trade real quick. And let me go to First Solar. So this stock, okay, so let me bring up the trade. We saw going across the tape. So we watch institutional order flow, okay? So today in First Solar, a trader came in and they bought the weekly 51 calls for 46 cents, okay? The weekly 51 calls for 46 cents. So I went in the option market and I paid 54 for 200 of these. I sold these as high as 90 cents. As you can see here, my profitability here on the day is $4,000. And we're not talking about monopoly money, guys. This is real money, real profits today, and that's included in the $20,000 that I made today. $4,346. So if I wanted to, I'd go out, buy myself a Rolex, go to the nicest dinner in town, go to the club, do anything I wanted. Pay my rent for 3 months. Well, my rent now, but most people's rents. And you can see here my position is 0. Okay. So out the course of the day, I'm watching institutional order flow. Why do I want to watch institutional order flow? Couple of reasons. They have information, technology, and manpower capital that I do not have. So Humphrey asked a question. He says, how do you pick a strike? I watch a proprietary-based scanner. And I don't own this scanner. And I just follow the institutional order flow. So they bought this one. And then one of my other trades today was SWK. And a trader came in today and bought 2,500 of the SWK July 105 calls. So I came in. What did I do? I bought the exact same strike. Same strike, same expiration. As you can see here in SWK, I sold these all out at $1.70. Look at how much money I made today. Pure profit in my pocket. $4,000. And you can see here my quantity is 0. Once I said, guys, this isn't a simulated account. This isn't something that happened 3 months ago, 3 weeks ago, 3 days ago. This is my actual live account. You can actually see the day and the time up here. Okay, so that's the day and the time. It should be taken. So some good trades that hit the tape using unusual option activity today. So let me move this out of the way. Go on with the rest of the presentation. Okay, so what is unusual option activity? We talked a little bit about what unusual option activity is. Unusual option activity is driven by institutional order flow. Unusual option activity gives us an order that is above the average daily volume in a given stock. These orders give us insight into institutional order flow. We talk about it, guys. Something is only worth the difference of someone's willing to pay and someone's willing to sell it for. If there's more buyers than seller, price goes higher. If there's more sellers than buyer, price goes lower. So these traders give me an idea where smart money is going. Okay, I'm not watching the guy who's trading a 20 lot. I'm not watching the guy that is trading a 50 lot. I'm watching a guy trading 5,000 lot, 10,000 lot, 20,000 lot. Okay. So let's go example here and look at another one today in HVQ. And actually, to be honest, this one didn't work as well, but I still believe in it, and I still think it'll move higher. So in HVQ today, an institution came in and bought this week 34 calls. Okay? And we see they bought over 30,000 of these trades. So someone came in and bought HPQ this week, 34 calls for 28 cents. At a point in the day, I was up almost $8,000 in HPQ. Okay, stock sold back off, but I was up a lot of money very, very initially. So this shows me where smart money is coming. Okay, let's go to the next slide here. Okay, so what does unusual option activity look like? Okay, and this was a trade of cores the day after earnings. Okay, and we all know, okay, weekly options, you know, those First Solar weekly options doubled in value in less than 10 minutes. They went from 45 cents to 90 cents. Okay, usually you're not going to get that kind of return on investment in an option that is much longer dated. Okay, so trading, swing trading, is way different than trading day trading. I will admit, I am probably the most day traders out there. Okay, I don't know why. I feel like I panic too much. I just don't day trade as well. I am probably one of the best traders on spotting unusual option activity, knowing which trades are good or not, having exits. But personally, as a strict day trader, I'm not that good. Okay, I try to. It's hard for me to get in and out of positions in the same day. I think on a trade that lasts 1 day to 2 weeks, you know, I'm probably one of the best people out there. But just strict day trading, I think there are a lot of people that are better. But that's why I like to swing trade, and that's what we're going to teach you today. So this is unusual option activity in Michael Kors. So we see a trader bought 9,000 KORS June 45 puts for 35 cents. Timestamp, this is coming straight from the trading floor. Okay. Shows if it's bought or sold. These are bought, which is bearish, puts being bought. Okay. Then we see the trade size, 9,000, controls 900,000 shares of stock. We see the symbol, KORS. We see expiration, which is the June expiration. Then we see the strike, which is the 45. So this is straight from the options scanner. Weekly options, how close to expiration? I can answer now. You know, I'll do it today. You know, if there's weekly options on Friday, I'll take them. I'll take weekly options on Friday. See the type? There's only 2 types of options, guys. There's calls or puts. Price traded, 35 cents. Exchange is the CBOE. And this shows me if it's an opening or closing position. I only want to take opening positions. I do not care where a trader's closing position. I just want to take opening positions. This is where the stock was trading at the time. So a trader came in, said, I want to buy 9,000 KORS June 45 puts for 35 cents. Stock was trading 49.40. And if we had a timestamp, I think this was like from like 3 or 4 days ago. Yeah. So this trade hit the tape after the open. It's about 3 days ago. Kors reported earnings and the stock gap lower. If you look at it as a nominal amount, this was a $315,000 bet. 9,000 times 0.35 times 100. The stock did what? It continued to sell off. So we see puts being bought here. Okay, June puts, front month options are going to have more risk, more reward. Okay, so we see here. Let me change the color of my arrow. And I don't like to show examples. I know some people like to show examples from 2012, 2013. I'll show you examples that happened today, yesterday, last week. Okay, so I like to show you guys real-time examples. So the stock then went which way? Straight down, all the way down to $46. Okay, so the stock sold off about 6%. So let's see how the options did. So at the bottom, these things went up to $1.10. So if you hypothetically speaking, $1.36. Sorry, $1.36. So these puts went from 35 cents to $1.36. The stock sold off how much? 6%. So you could have got that 6% move on Kors, or you could have just followed the institutional order flow in and potentially made $2,000 profit on a $700 bet. Okay, $2,000 profit on a $700 bet. And I announced this trade to all my subscribers in the trading room. Okay, this was an example of a trade from Kraft on March 10th. A trader bought 10,000 of the KRFT, June 67.5 calls, for 70 cents. He's traded as high as $22. One of my subscribers emailed me and he made $215,000 on this trade. Okay, I actually didn't have these on. I had these on and I took them off. I had to do a CNBC interview and tell them how I would have made like $400,000, but I took the position off before the big move. So that sucks. Okay, so why take these trades? You're asking yourself, hey, that's great, Andrew. I see how you made money, but why should I take these trades? The hedge funds and big traders have more information than we do. That is why they're always getting in trouble for insider trading. Trade with the pros. Imagine knowing David Einhorn or Carl's positions on before they are disclosed. And the best thing about it, guys, is all these trades are public information. Once they're traded, it doesn't matter if they are traded on with insider information. The minute they hit the trading tape, they become public information to all of us, okay? And you guys can get great trades for free. They are a little bit delayed on a couple sites, and I'll show you the sites. I have no problem showing you other sites. Option Monster is a great site where you can get unusual option activity. Everybody knows the Nigerians are on CBC all the time. Okay? And they write articles on unusual option activity, notable option activity in equities. And they'll list some stocks, H&R Block calls, TRP calls. And look, these are the ones that I bought. Shocking, right? We all see the same thing. The great traders trade alike. Okay? So Black and SWK, I made $4,000 on that trade. So this is a great site to get unusual option activity. It's about half an hour delayed. You're not going to get it real time because you're not paying for it because it takes time to write articles. And the other one is Option Insider. I think it's the Option Insider. The Options Insider. So this is another great free source where you can go in here and get the unusual option activity, okay, and decide if the trade is good for you, okay. I'm not here to tell you, this trade's going to be good, this trade's going to be good. I'm going to show you how you can use institutional order flow and potentially beat the hedge funds in the long term, okay. So here is a trade in LQD, and you see an article written up on unusual option activity in LQD, okay. So a lot of these sites give you this information for free, which is great. Okay, what if I can't get in the trade this quickly? Okay, I actually had an email today, and this is actually a perfect example. Let me see real quick. I might have deleted it. I delete a lot of emails. Oh, look, it's right here. So someone said, Andrew, I'm enjoying the first few months of the trading room and my first week with the Option Hacker. Just a quick question. I'm sitting in front of the computer. First sold printed on Option Hacker. I checked, and they moved so fast. How'd you get in at 54 cents? They already went up to 74. Okay, 74. So it's really, really hard sometimes to get into these trades, okay? Why is that? Well, because these move very, very fast. So the subscriber's like, hey, I couldn't get in at 54 cents. Why is it so hard to get in these trades? Well, the weekly options are going to move the most, then June options, then July, then the August options. Okay? So I'm a very active trader. I sit in front of my computer, and I'm trading all day long. I might hold a trade for a couple minutes. I might exit in a matter of 20 minutes. Okay? Not everybody can trade this fast. Okay? Some of us, not like me, like to actually think about what a company does. Fundamentals. Do some technical analysis. Do some research. And that's why swing trading is really good for the majority of the people. Unless you're an expert trader and you've been trading for a really, really long time, it's really, really hard to take money and make money as a day trader or trading in and out of positions. So there are some really great trades that I do not take because they are a long-term hold, okay? A lot of you guys, most of you, should be swing traders versus day traders. If you can day trade and you can officially make money day trading, more power to you. It's very, very hard, though. Swing trading, I think, is much, much easier because you don't have that emotional psychology involved. Okay? So this is an example of a trade that we saw in General Electric. And I'm going to teach you guys a OCRRBTT, 7-step trading plan. So when you leave here, you can go to optionmonster.com. You can go to the Option Insider, and you can look at the trades. You can figure it out with your own technical analysis if these trades are good for you, okay? So I'm going to teach you guys my proprietary-based trading plan. I created this trading plan 3.5 years ago when I left the trading floor. This is a decade of research from the trading floor on how I want you to figure out if a trade is good for me or not. So we saw unusual option activity on February 27th, 2015. A trader bought 150,000. Okay? Yes, I said that right. He bought 100, sorry, he or she, bought 150,000 GE, January 2017. 30, 35 bull call spreads for 52 cents. They bought the 30 calls and they sold the 35 calls against it in January 2017. Okay, I actually came in and I bought the January 2017 30 calls. 3 days later, I sold them out. Okay, if I'm trading a January 2017 position, I should not be looking to day trade. Day trade weekly options, day trade front month options, trades that are January 2016 and beyond are considered swing trades where you can add to a losing position. You can look for a pullback, okay? So let's go through the Oak Ribbit proprietary-based trading plan and figure out if I wanted to make this trade. This was a $7.8 million bet in GE. Think of the reward to risk setup. The trader was risking 52 cents per one lot, $52 per one lot, to potentially make $458 per one lot. So go through the trading plan. The first thing I look at anytime I see unusual option activity is volume versus open interest. Repeat that 10 times over. Volume versus open interest. I always want to make sure the volume is greater than open interest. If we see volume less than open interest, I don't want to make a trade. For example, today in First Solar, look at this. The volume on these First Solar calls traded over 7,000 of these, open interest 340. So that meets my first criteria field. That criteria field is not met, I will not take a trade. Also go to SWK. Exact same thing, guys. What I do is I look at the volume versus open interest. This is so important. This is the number one step of the trading plan when you are looking for unusual option activity. Volume, 5,700. Open interest, 700. Okay? Very important. Then, only if volume is greater than open interest, okay, I can move on to the next step of the trading plan. If volume is less than open interest, I will not make a trade. Then I look at the chart. I'm a big believer of Ichimoku Kinkan Hoi. You can use whatever technical analysis you want. I only want to be buying calls in bull charts. I want to be selling, I want to be buying puts in bearish charts, okay? So I look at the chart. If it's bullish, I only want to get long. If it's bearish, I only want to get short, okay? I use the Ichimoku cloud. If you're a beginner trading using the Ichimoku cloud, I want to take longs above the cloud, I want to take nothing in the cloud, and I want to take shorts below the cloud, okay? So once I know volume is greater than open interest, I got to take a guess. Is this a speculation or is this a hedge? So we look at GE here, and as we see here in GE, the daily chart is bullish. The stock was starting to break to the upside, so this sets me up as a great long-term swing trade. Okay? This is not a trade that's 2 or 3 days, not a day trade, not a week trade. This is a long-term swing trade in General Electric. My criteria 1 has been met. Volume is greater than open interest on the long side. Criteria 2 has been met. The chart is lining up bullish as G's continue to make higher highs, higher lows here on the daily chart. You can see here, this is a clear bull channel. Every pullback is bought. And the unusual option activity. You know what's the odds this trade works? Can't give a percentage chance, but allocating capital in here, okay? And I always talk about, trading, okay? percentage, probability, math, right? If I always say, if I go to the gym with my buddy, he says to me, Andrew, I can make a half-court shot. Well, I'll bet you anything you can't, because I know the odds are in my favor. If he said, hey, okay, I want 10 to 1 odds, well, you know it's probably somewhere in between there, okay? So as a risk versus reward setup, there's a very high probability that this trade will work to the long side in GE based on unusual option activity and based on the chart. Then we look at things called a risk reward, okay? Some people like to rest and relaxation. Not me. I'm not a big resting and relaxation guy. I'm always on the move. I'm always bebopping, okay? R&R, risk versus reward setups. How much am I willing to risk on a trade, and how much do I want to potentially make? You can look at your risk on a trade and the difference between good traders and great traders. Good traders think about how much money they can make. That's never how you should trade. You should think about how much money you can lose if you are wrong. Okay? Don't say, oh my God, if I buy calls in GE and the stock goes to $300, well, GE is not getting to $300. Okay? So think about how much money you can lose first. Okay? Risk versus reward setup. I always say, as a beginner, you can use a 20% stop loss on your options. If you're intermediate, a 50% stop loss. And then I am an expert. I do not use stop losses at all. That's a good general rule of where to do through your stop losses. So we have O, we have the C, we have the R, we have the R, we have our B, which is break even. You always want to know your break even on expiration. Then we have T and T. San Diego invented tacos and tequila. There's nothing I like better than tacos. A Corona Light with a lime. Sounds good. Maybe I'll get it tonight. But time and target. Okay? How much time are you going to give on this trade? Where are your targets? Okay? Some traders like to buy options, take off half at a double, and then leave the other half, let it ride. Okay? I trade that way with butterflies. But where are your targets? You should always have targets in place. Exit plan. They always say that it's important that the airplane gets off the runway, but it's more important than the plane actually lands. I'd rather never take off than never land. Think about that one, okay? So always have exits out, okay? Figure out where you want to take this position off, okay? And, you know, depending on what kind of you're trading, you know, if you bought this GE call spread, you can take off half at a double, maybe take off 25% at 50% gains, 25% at 100% gains, 25% at 150% gains. But realize this is a swing trade, not a day trade. So a trader bought 150,000 of the GE 2017 30, 35 bull call spreads here for 52 cents. Guess where they traded? Exactly double. Okay, so these went up to $1.04. Currently, it's trading 83 cents. Okay, so if you took this trade and if you took off half at a double, you would still be in this trade. You have a swing trade in the option market with a predefined risk, a predefined reward, and you've already made 54% profit. How much did GE move up? It didn't move up 54%. And that is why the option market is so great, is you get a better ROI, return on investment, okay? If you buy $500 worth of stock, you need that stock to double to make $500, right? Well, in the option market, it's very easy for a stock for options to double. Like I said, in First Solar, the stock moved up 70 cents. My options doubled in value. In GE, yeah, the stock moved up, and I would have made money owning the stock. Okay, but if I have the option market, it's going to get me those returns and magnify them. So if you guys are mostly stock traders, that's great. Okay, you got to take your trading to the next level, and the next level is trading options, and that is the wave of the future. Option volume is only accelerated month after month, year after year. That is the wave of the future. That's where you can potentially make more money quicker and a better return on your capital. So GE gapped higher. GE went from 25.60 to 28.60. Okay, so it did go up about 12%, but as I said, the options went up 100%. You guys do the math here. What's better, 100% return or 12% return? Which one of these strategies is going to require more capital? Is the stock going to require more capital, or the option are going to require more capital? The stock is going to require a lot more capital. That's where options were created in the first place. So you don't have to have so much money at risk at all times. So GE spiked, options did great, stock did great as well, but your return on investment is going to be better on the options. Okay, so we're talking about day trading versus swing trading. Okay, I day trade some things. I call them WLD, win, lose, or draw. I will take off the position by the end of the day, and then I will take off. If I have a swing trade, something that's January 2017, I personally don't trade that much swing trading. And the reason I don't take that much swing trading is because I have to put that capital aside, okay? I'm an active trader. I'm getting in and out of positions. And we always say, what has more risk? Does the weekly options have more risk, or does January 2017 have more risk? The weekly options are going to have a lot more risk. Let's say Apple's trading $130. Would I rather, the 131 calls expire on Friday? If they do not move, I will lose all my premium. The January 2017 131 calls, I have a very, very long time. So this course is going to be great for you guys if you want to be in the market, you want to put on longer term trades and not be, stress out and freak out on your P&L moving so much. You put on a position, using unusual option activity, using the charts, you putting risk and probability in your favor, and hold positions for a longer term. So I personally don't take a lot of these trades, but there's tons of really good ones. Like I had a trade in AOL, and I think I'm up like $4,000 in AOL. There was an October positions, okay? And I flag all these trades for my traders, okay? I show them, hey, in APC yesterday, they bought call spreads to sell puts. It's bullish activity, but it's bullish activity to January 2016. I have about $500,000 in my trading account. It's a lot of money, okay? But if I buy $25,000 worth of calls, I'm going to have to sit and hold these. So I don't really actively take these long-term swing trades, but there are tons of really, really great trades, guys. You guys can get all these trades on Option Monster. You can get all these trades on the Option Insider. You can get them on our blog. You can get them on Trade Thursday's blog. So you can get all these trades, and we're going to teach you in the course which ones set up for the best setups. Using that Oak River trading plan, talking about a reward to risk setup, knowing which setups and trades potentially can put the probability in your favor. Someone has a question. It says, how do you decide when to sell if the trade looks like it's going against you? Stephen, that's a great question, and that's why we use stop losses. So beginner can use a 20% stop loss, intermediate a 50% stop loss, and then I don't personally use stop losses. So here's a couple testimonials. I have an inbox from testimonials. I probably have 120 of them in there. And Carol says, I know I've said this at least a few times before, that I've had my best day ever in Keen on the market. Today I sold night 50 of the Craft KRFT. April 67.5 calls for a massive, massive profit. I sold some on the open and let the other ones ride. Bala said, hey Keen, unusual option activity is awesome. That trade that hit in DRC, guess what? I made 10 times my money I invested in this morning. I bought 30 contracts on average for 60 cents and then sold them for $6. Matt said, trading with KOTM has been very, very good to me. And this is a trader who emailed me and told me he made $1 million from being in the trading room last year. Okay? So these are just a couple testimonials. I have an inbox with hundreds of these in there. So we have a great course and workshop available for you guys. It is a live course and workshop. It is only $99. Let me go through here. Put the link in here. And then I'll go over a couple charts. We'll give away a couple courses for free. So we have a swing trading long-term unusual option activity workshop. I'm going to change the title real quick. Oh! I'm going to change it to how to beat the hedge funds. That's my puppy. In the long term. But thank God I didn't have any embarrassing pictures up there. Okay. So how to beat the hedge funds in the longer term. It is a regular price of $497. This is a live course. It is going to be June 18th at 8 p.m. Eastern Standard Time. We have 25 spots available, and this is what we're going to teach you guys, okay? After this goes, we offer this to you guys. The price goes up. It's 80% off. How to swing trade option positions with holding periods between 8 months and 1 year. How to trade short-term bottoms and tops in stocks with less risk. I've done 3 videos, and I called short-term bottoms in Baba, GoPro, and I call it a short-term bottom in Twitter. Okay? How to look for these bottoms and set up a great reward to risk setup. That is Eastern time. Eastern time. How to avoid losing money due to options time decay. Okay, can't tell you how many emails I get from subscribers. They go, "I'm long calls in Apple. The stock went up. I lost money. It's a scam. They're scamming me." No, it's not a scam. Okay, the point of the matter is that simple and easy, guys. You're not trading the right options. A to Z trading plan for swing trading these positions. Learn entries, stop losses, profit targets, and a systematic approach. These are great for trades in Baba, GoPro, Apple, Facebook, how to do short-term trades, short-term trading, use some longer-term tradings, okay? And an extensive Q&A. So let me tell you guys what you get. This is 100% money-back guarantee. So if you take the course, okay, and you don't like it, we'll give you your money back. That's number 1. Number 2, this is a live workshop. This will be taught with James and myself. This is our newest topic. Okay, and I can actually show you the one in GoPro. I call the bottom in GoPro. I should have put this in the thing here. And this is from March 23rd. This is straight from CNBC, guys. This is how I found the GoPro and put it on a longer term trade in GoPro. Okay. Started saying started seeing consolidations at 40. I didn't think it was going to break under 30. And this was my trading GoPro, and I made about $2,000 just on this one trade. And this was an article and video I did finding those short-term bottoms. And I'm going to teach you guys how you can find those short-term bottoms. So number 1, money-back guarantee. So if you don't like the course, yeah, this is a great course for someone under $10,000. This is a great course for anybody that likes to have longer trades, okay? Not be in and out of the market so much. If you're only a day trader, this is probably not the best course for you, okay? But if you like holding periods of 6 months to a year, okay, this is a great, great course for you. Number 1, money back guarantee. Number 2, 80% off, $99. Number 3, we will sell out of this price point. We sell out of all of our courses. And number 4, it is a live workshop plus the recording. You'll get the on-demand recording for life. Okay, so you'll get the on-demand recording for life. So you can call us at 312. I hear the phone ring right now. 312-261-5581. Or you can sign up. Maybe that's why, because I put in the wrong link. Or you can sign up at keenonthemarket.com/CTU. Or call us at 312-261-5581. We're going to go over some charts real quickly, guys. If anybody has any questions about any stocks, I can go over any charts. I am an expert on looking at charts here. Just fire away with any charts. I will look at the Ichimoku cloud, and it will predict the future. Does anybody have any questions about any charts? I know the big ones we always get is Apple. I think Apple's going to move with the market. So if the market takes out all-time high, I think Apple outperforms the market. Here we have Facebook here on the daily chart. So Facebook on the daily chart, it's actually technically a short here. I wouldn't want to take Facebook until it breaks 82.5 to the upside. Let's look at Celgene here. Celgene, my finger is kind of slow here. Celgene, I always get, people always ask about Gilead. We have a power ranking of never -9 and falling. Under the Ichimoku cloud here, I would only want to take a short here in Celgene. I think shorting Celgene here with a stop above 121 makes sense. I think Celgene heads lower. The discount is $99 because it's usually $499. It's a $500 course. If you don't sign up through the link and you sign up on our website, it's $497. The Qs are probably going to trade a lot like Apple. So let's look at the Qs here. I think our swing's acting really funky. So Qs are pretty strong. I think the Qs are a buy on any pullback here. The first buy opportunity here in the Qs is on the 9-period moving average. You put your stop under the 26. So you can buy the Qs right here with a stop under 107.07. WUBA. George is in. Carl's in. James is in. Starting getting emails coming in about people signing up. Great. Looking forward to it. 2.5 hours course boot camp. It's only $99, guys. Let me go here. WBA, 58.com, internet play. It's starting to consolidate here. I don't know if it gets above 83. I'd rather be long than short it, but if I had to choose nothing, I wouldn't mind not being in the stock at all. You can short it here with a stop above $84. No, you don't need to understand Ichimoku at all. Ichimoku is really easy to anyways. It's above it. I actually did a CNBC interview for Twitter. I can show you that interview. I call it a short-term bottom here in Twitter. Not saying that Twitter goes up initially right now, but I don't think Twitter breaks $30 ever. So I talked about a bullish trade in the long term here in Twitter. A bullish trade here in the long term in Twitter. Any other stocks you guys want to look at? We have Costco. Let me look at Costco. So Costco here. Let me pull it back here. So Costco broke the cloud to the downside. Costco is only a short. I think Costco heads lower here. Technically a short right here at 147, and it's moving lower here. Tesla, I think the short, I was actually going to come up with a trade and say the short-term top is in for Tesla. So let me go into Tesla here. Tesla, I think the short-term top is in. I don't think it gets through 252. It might have a false breakout above 252. Technically, it's a buy. I think Tesla's overbought up here, and I do not think the Tesla breaks through 252. So I'd rather short it up here, even though the chart is really strong. You know, Tesla's gone from 181 all the way up to 252. So I think it breaks lower. Qualcomm is a very choppy chart. We had some great unusual option activity in eBay for the long term. Qualcomm is choppy here. I would rather not do anything here in Qualcomm, and I'd probably rather be short it. There's some activists, activists are interested in Qualcomm, but for some reason, the stock doesn't want to go up at all. So I'd rather be flat Qualcomm than anything else. Okay? So let me go over the course one more time, and then we'll let you guys go, and we'll call it a day. This is a live workshop. It is June 18th at 8 p.m. Eastern. If you cannot attend, you will get the recording on demand for life for free. If you cannot attend that time, no worries. How to swing trade option positions with holding periods 6 months to 1 year. How to trade short-term bottoms and tops in stocks to avoid less risk. I've hit short-term bottoms for CNBC in GoPro, Baba, and now I'm calling one in Twitter. I do not think Twitter will ever break $30. How to avoid losing money in options via time decay. A to Z trading plan for swing trading these positions. Great plan for momentum names like Baba, GoPro, Apple, Facebook, plus an extensive Q&A. You guys can sign up at keenonthemarket.com/CTU or call us at 312-261-5581. 100% money back guarantee. It's only $99. It will be a live workshop, 2.5 hours with myself and James. Then we'll have the Q&A at the end. Also, you'll get the recording on demand for your life. Does anybody have any questions? Please let me know. If not, it's pretty much it. Anybody have any questions at all? Perfect. Pretty much covered everything. Get a couple emails here. Walt Wilson, you are in. Steve, you are in. Phone's ringing. We got about 17 more spots, guys, so make sure you take advantage of this offer. Thank you so much, Fausto, for having me, and I will see you guys in the workshop in about 2 weeks here. Thanks, Denise.